Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Jeannette Lowe. She is a managing director and Washington research analyst at the firm. Jeannette, how are you doing today?
I'm good, Ross. How are you?
I'm doing really well. Thank you so much for asking. I want to start, there's a lot of debt ceiling and budget concerns kind of swirling around Washington and in financial markets. I want to start with the CBO released their February kind of budget and economic outlook recently, and there were some big takeaways that you all have highlighted in some research for us. But I'm curious, what is your big takeaway, and maybe we can get into some implications of that in a few minutes.
Right. So the CBO, which is the Congressional Budget Office, released its budget and economic outlook on February 15th. And so this was last updated in May of last year. And so what it found was that the US is going to see an increase in the deficit over the next 10 years. Some of that is due to greater federal spending that we've seen pass through Congress over the past year. But a lot of it is also due to the greater economic situation that we are seeing, and most notably that has to do with higher inflation. So one of the key things is that interest costs in general in the US have been relatively easy to manage. We've had low inflation for a number of years, but now that we're in this higher inflation environment, we've had the Fed having to increase interest rates to bring down that inflation. That now is going to impact debt interest costs in the US. So we've usually not had to worry about whether or not the cost to manage the US debt is manageable or not. But now we're actually looking at this starting to become more of an issue. One of the things that we know is that in general, about when net interest costs reach about 14% of tax revenues, that is when the financial markets begin to impose austerity on policymakers. We are currently at 11% as of January, but we do expect that we're going to get closer to that 14% of tax revenues later this year. And this is going to start to put some onus on members of Congress who are particularly watching the fiscal situation quite carefully to have them impose some sort of austerity measures.
Right, and you all have mentioned the kind of austerity measures that could be imposed internally or by financial markets as interest costs are set to rise and as federal spending continues to ramp up. What is that, in your perspective, what does that actually look like? I mean, from financial markets, is it volatility? Is it higher rates? Is it widening spreads on kind of high yield or junkier credit? And then internally in Washington, what else might that look like? Spending cuts, spending reform. I'd love if you could go into detail on what that might actually look like over the coming years.
Right. So this year, we think in particular, there's a number of possibilities for where you could start to see this catalyst for this discussion to take place. One of the biggest ones is the debt ceiling debate. So the US will need to raise the debt ceiling later this year. Currently, the estimate is that will not need to be done until July. So that sets up a summer debate to have a discussion about whether we need spending cuts to be attached to the debt ceiling. This is similar to what we saw in 2011. We had $2 billion of spending cuts at that time. You saw some market volatility as the policymakers in Washington were trying to figure out what they were going to do in order to raise the debt ceiling. But then also when they saw the size of the spending cuts that were attached, the market also had to reprice for lower economic growth projections. And that also created some moves in the market. So this year, we could see something similar. We could definitely see spending cuts as well. We could see other fiscal reforms. And I think it's important that it's not just even about the debt ceiling debate. So yes, we could see spending cuts attached to that debate later this year. But we also have government funding that needs to come up. So, the fiscal year for the federal government ends September 30th. That could be another potential fiscal fight where we could see some issues of trying to cut spending or put some other fiscal reforms in. And then as we look at other reauthorizations of government spending, that could also come into play. The other thing that the CBO report mentioned is just that there are 3 trust funds that would run out or not be solvent within the next 10 years. And that's highway, Social Security, and Medicare hospital insurance. And so you could also see that one of those, as we get closer to that time frame, that could also be another catalyst where we have to do a larger reform package to make sure that one or more of those programs are solvent. So I think a lot of things are currently on the table. Right now with Republicans in control of the House, Democrats in control of the Senate, Democrats are going to probably push for more of a tax increases. Republicans will be pushing for more spending cuts, but they have to have ultimately come to an agreement because we do have split control. And so you could see something along the lines of spending cuts, lowering the rate of increase of spending growth in the future. There might be some talk at some point about whether or not we need to change the tax structure a little bit. There's a lot of things that could still come into play, but I think right now we're still looking for what that solution will be, but it will be a big part of the conversation this year.
Right, and that's a lot of catalysts on the table. I think you've mentioned kind of the near term next one to watch is April tax revenues as they come in and we kind of get a better sense of what the revenues look like compared to all the spending that we're talking about. So in the meantime, we appreciate all of the insight, Jeannette, and hopefully we'll get to talk to you again soon as the debt ceiling ramps up and as these budget reform conversations come into greater focus. So thank you so much for the time today.
Thank you very much.